Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel Elconin, along with Brianna Valesky, and we have a MarketFi maven on the line, Serge Berger. He's head trader and investment strategist at the Steady Trader. Serge, how you doing during this earnings season?
I'm doing great. How are you guys? Good morning.
Glad to have you back on. Could you tell us a little bit about your product on MarketFi?
Yeah, we have a couple of products in MarketFi. A couple of them based around education. The main product being a trade alert and analysis product, which is sort of the main product called the Steady Trader, where people see all of my trades, all of my analysis throughout the day. You get morning videos, they see the full portfolio, all the history, and sort of get the full shebang, all my insight and discussions I have with hedge funds and institutional investors all day long. So it's really good insight into what a real professional or someone who does it for a living does on a day-to-day basis.
And how are the big boys feeling up here at all-time highs? I mean, boy, we had some resistance up there in the S&Ps. It just seems like you had just someone, and was talking with my buddy at 2112, the old Rush album. That's the old-time closing price. You had someone, putting their foot on the market there. Oh, sorry about that. I was trying to pull up your chart. Uh, you like that
That's one
music?
heck of a chart.
What's your take? What are the institutions doing up here?
I think folks are getting a little bit more nervous, rightly so. I think some of the mixed signals we're getting from central banks around the globe now are getting a little bit more mixed, even so. So, for example, yesterday's non-statement out of the Fed
Yeah,
was fairly confusing, to be honest with you. We saw that in global macro, big moves in the dollar rates
On
somewhat, and
September
equities
11th,
just kind of
my home
slosh
was
around.
sorry about that. I guess we're not going to be
No
able
worries.
to bring your chart up here, but you wanted to talk about the transportations. What do you use to chart the transportations?
Yeah, I think it's an interesting chart, and I sent it over because we're at an interesting juncture. So transports, this is basic Dow theory, tend to have some sort of leading indicator mechanism to them, and I like to look at things. We've talked about this before on the show in both absolute and relative terms. If you look at the transports, and right now you can look at the IYT ETF. You can bring that up on the
Okay.
chart, I'm sure. You'll see that basically we have had a non-confirmation of the new highs in the Dow itself, right? So look at the transports. The IYT topped out last December, early December. The Dow obviously continued to rally for a little bit longer. So that's the absolute picture, but more interesting to me is actually the relative picture. So if I take a ratio, I do a ratio chart, which is basically take one asset divided by the other. So I take the IYT and I divide it by the SPY, or the S&P 500. We have now broken multi-year uptrend lines, and all of this is coming on real, like, serious overshooting topic signals, complete divergence between relative strength as well and price. Like, for example, the RSI, which is a popular directional oscillator, topped out basically last June. So the entire rise since then in this ratio has been coming on the accelerating momentum. So to me, that's a pretty good warning sign that I think the transports, or at least the ratio of transports versus the S&P, has probably peaked out already.
Okay. All right. And boy, looking at this chart here, boy, you made the high. I don't know if that we talked about Fibonacci's a 50% retracement. I don't know. Is that something that you use at all in these calculations of, of targets and what you're looking for? Because I'm looking here at this IYT, and you made a high over 164 here, like 165. Let's see what the all-time high is here. Made a high at 165, and you had to dip down to 154, 11-point move. Five and a half of that would take you back up to the 160 level. And lo and behold, that one kind of worked there. You got the 160.29. Do you use Fibonacci retracements at all to test the validity of a counter move?
No, I absolutely do, and I think, like, right now, for example, on that topic of the Fibonacci's, if you draw a Fibonacci off the October lows and you take it to the top, let's call it 166, 165. We actually had a spike a little bit higher. You get about a 50% retracement at basically the early April lows, right? So to me, certainly when we start taking those out, will have broken below 200-day moving average more meaningfully, and that ratio, and then the absolute chart that we're looking at here, as opposed to the ratio chart, is also really turning bearish. So, those are some signs here that we're slowly but surely moving towards a better sort of correction, which, for all I know, we could rise another 2-3 months here, entirely possible. But at some point, this is going to come home to roost.
Okay, and you mentioned the Fed statement yesterday. They kind of kicked the can down the road, wouldn't you say?
I think what's been happening, we've seen a Fed that desperately wants to raise rates, but they just can't because they do want to stick to this data dependency thing. Otherwise, they lose even more credibility than they've already lost. And by the way, I'm not critical. I wouldn't want to have their job. It's really hard, but it's just sad to see them constantly, literally miss the ball. And so what I'm seeing here is basically the Fed having come more back in line with what the rest of the world's doing, and that's becoming more dovish, right? We've had continuously dovish moves out of Europe all year long, which is why their stock markets have gone vertical. Then you look at Asia, China's trying to do their thing. Thailand cut rates a couple days ago, or yesterday actually. So the Fed just getting more in line with the global reality is that we don't really have any real escape velocity.
Okay, let's talk about the dollar. I mean, that was the culprit for some earnings last quarter. Not hearing as much talking now. The dollar's really come off here, off those former highs of the move. And any take on the dollar?
Yes, I do think the dollar, the way I look at the dollar is I don't think we've topped out from a multi-month perspective. We've certainly had a good move lower now, and I think we're coming more and more into a support area. If you look at the dollar index, sort of in the low 90s, maybe mid 90s, where we're at right now, where we're going to be done. The reason why I'm saying that is because, and I think we're going to start bouncing in here into the summer. The reason I'm saying that is because the top that we had in early mid-March came on a new momentum high. You rarely see like meaningful structural tops or like multi-month tops, at least in any asset on a new momentum high. You most of the time you see divergences. We haven't seen that here in the dollar index, and so I think that's what's probably going to give us another bounce here into the summer at some point soon.
Okay, S&P's coming back down to the lows for the session here. We had to pop off the number. Brentster, we got anything going on? We just fell out of bed here in the spoos. Let's just take a look here at the S&P's. Yesterday's low, 90 and a half. Current low, 90 and a quarter. Something came out. Serge, do you trade the S&P's or do you use them as an indicator at all?
Yeah. I mean, I think you have to use the S&Ps, particularly the overnight session in the ES is always interesting to watch. And you're right, we're coming back down. What's interesting here is you have if you want, this is real near term stuff, right? But I mean, look at the lows. Overnight lows were about 2090 on the front month contract. That coincided with yesterday's midday sort of lunch hour sort of lows. And we look like we're going to go below that. And so to me, it looks to me like we're going to go below that at some point today. Maybe then we get a flush out. That's sort of where I'm set right now.
Yeah, you know what? I'm just I love talking the levels with you here. I'm not going to get real excited, Serge, until we take out 88 and a quarter. That was Tuesday's low, and then you have a low going back to last Thursday at 87 and a half. So I'm not going to get real excited yet. I'd certainly like to see it take out the low from yesterday, but a little bit of downside action here in S&Ps. Just want to get your take on the crude market here. Crude back over $59. Recovery high here. We were talking about, Kyle was asking me about a significant level on the upside here, and wow, this kind of move that you've had down from the crude back mid 107s. I mean, back in June, July last year. Where would you use as a target? I mean, JC mentions mean reversions. Long way to go even to get to 50%.
I agree. I've been right there with JC. I think, there's a lot of sentiment. So I use Twitter as a great way to gauge sentiment. And I have this thing called basically a contra stream or contra sort of indicator on Twitter where I have a lot of guys that are basically constantly wrong, and or get very emotional. I should say, it's sort of a bit more politically correct way of saying it. And those folks got very very bearish right at the when we flushed out in mid March. So to me, this is a reaction. It's sort of like a counter reaction. We stretched the band too far. I have no reason to think what we can't get to, on the futures here towards like maybe 65 or so, whatever that translates over into spot.
Uh-huh.
This is a light sweet crude, right?
Okay. So you mentioned Twitter there. So you're kind of a fader of the Twitter sphere?
I'm a fader of the emotional, the Twitter is great, and it's mostly great because you get really smart people, and then you get the rest, right? And and so I like to use the smart people to follow and actually sort of get their guidance, or at least I'll then format of whatever I consider reasonable guidance for them and make my own opinion. But I'm more of a fading of the masses, and Twitter's terrific for that. I mean, it really, really is. And it's to me like in the past we always had to look at these like AI investor confidence numbers and all those things, and those are good, but like Twitter's instant. Like instantaneous. You see a whole bunch of guys blabbing about all sorts of bearishes or bullishes. You can be pretty sure that it's pretty much over like right now.
Okay. What do you think of the stock?
So in full disclosure, I bought Twitter yesterday. There's an article up on Benzinga of that, and we did that in real time for the said traded product as well. I think the reaction that we saw on Tuesday, and then the follow through selling of like what 9+% yesterday, was probably more of a structural issue than something people focusing on the numbers. There's clearly a lot of issues with the credibility of a CEO that tends to, really talk a big game and all that stuff. But I do think it was the real shock in the way the stuff was released that just kind of got people flushed out. I saw a whole bunch of desks that pinged me and said, listen, we just saw a whole bunch of funds just like capitulate on speculative positions they had on into the numbers. So I think that move was just more structural. I do think the stock will recover. I think there's an oversold bounce here towards 44, $45. That should probably happen in the not too distant future, but we do need to see a little bit of stabilization and the emotions coming out.
Okay, all right. So, what's your setup? What do you buy? I mean, is this like a scalp? Letting it go pop back up, or is this something that I don't know if it's popping back up on you
Yeah.
yet? But you can always be a moron. Put more on and more on the lower it goes. What's your setup on this one?
What are you trying to say there? No, I agree. I think I think so. So the way I've traded this so far, we've just kind of nibbled on it, right? So I'm looking at pre-market right now. What 39.15 is the latest print. That's like what 70 cents or 60 cents above yesterday's close. See if that lasts. But I basically nibbled on it. Initiated a starter position on it yesterday. And then honestly, I need to see how it reacts. I mean, if it starts flushing out, it's about the velocity. Then I'll stop myself out if the velocity of the downside increases. But at the end of the day, we'll probably get a flush out move, whether that's today or tomorrow or in the coming days. We'll get a flush out move. So I might get stopped out before that flush out move, but I'll definitely be a buyer again of that dip, because I do think it's a volatile stock. It's gonna remain volatile, and there'll be a trade there regardless. And that's sort of where I stand on that. So, but it's important that the position size is important, right? So this is very much to me is controlled size, right?
Yeah, and that term is it's just like a trading desk joke and trading floor, is that when you're trading a stock and you're buying it and it's going down, you're going to be a moron. You're going to put more on and more on. But your strategy,
Sure.
and I think we talk about this with, Nick Shaheen and all our other expert traders, JC Pretz. What you're doing here is you're attempting to buy with a small position. If you get stopped out, then it's such a small percentage of your portfolio, you might take a stab at it again. But if continue to take small losses, when you do hit it, you're going to be rewarded.
Yeah, exactly. And so this is it's really a trade, right? This is definitely not even an active investment. This is a trade. I'm looking
Okay.
for a rebound. And this is Joel, this is an exercise in risk management here. That's nothing else. Like, you could, one of the best traders I know, he used to constantly say you can try just about anything as long as you have the right risk management tool in place, right? And the funny thing is, like, I had a subscriber, this is a while back, like last year or something, and he followed me for like a week, and then he unsubscribed, telling me, "Listen, I can't trade with someone that has to try a stock several times before he gets it right." and it just shows the mindset of a lot of people. They don't understand that sometimes you have to try things several times before they start working. It is like that in trading. It's just a matter of having the trade position sized correctly.
Serge, you're a veteran in the markets, working at J.P. Morgan. You've seen a transformation in the industry and online brokers now. What do you think about the online brokers at the present time? TD Ameritrade just hanging out here near all-time highs. Start with that one and let us know if you have any others on your radar.
Yeah, I've been pretty bullish on the brokers. They have, unfortunately, with the rest of the financial sector, been stuck in a rut. But, like, for example, Ameritrade, I think it looks pretty interesting here. If we can get, I mean, to me, I'd like to see it give us a bit of better momentum back about the 50-day moving average, which is actually quite relevant for this stock. If you look at it, it's basically near yesterday's highs. If we get above that, maybe we can get better momentum. Look at Schwab, for example. I like Schwab here as a tactical play. It continues to perk up, and yesterday's high, get above that 31-ish,
Yeah.
looks really giddy on the long side. Then you can look at the real big boys like Goldman Sachs. It's the same thing there. Bit of a, you have different players in that field, but yesterday we had an outside day. After a hammer candle the day before. So they're not looking bad. It's just that it's hard for these guys to get momentum if the whole market's stuck in a rut, right? I think that's more my general idea. But I'll flock to these, and I've been telling my subscribers this on a daily basis. They're probably sick of me saying this, but this is gonna be the first stuff I'm gonna press once we actually see some momentum on the upside, even if it's just a last hooray in the stock market.
Serge, we only got a minute or two left with you, but can we get a couple of good trading ideas for today or the next week or so before we start our weekly spot with you next week?
Yeah, for sure. So, I continue to like some of these steel names. So, like Schnitzer Steel, and AK Steel, or what's that company called? Yeah, AKS is this
Yep.
the stock. So all these names are a little bit more dollar sensitive. These kind of things, I've been very bullish on Schlumberger for a while. I actually put it on today's watch list again. I like the OIH, which Schlumberger, which is the ETF in the oil services space. The OIH actually is, or SLB, Schlumberger is the biggest holding of the OIH. They look really giddy yesterday. Schlumberger managed to sneak above its 200-day for the first time in quite a while. Again, this is very dollar sensitive stuff. So with yesterday's dollar down move, this was pretty good, and it looks good to continue. I still like things like actually on the short side. The one thing on the short side I like here is tactically. On the short side, I would probably like the biotech stocks, although they're all, again, sizes is the crucial thing in there. And last but not least, certainly CRM, so Chipotle. I'm sorry, CMG.
Okay.
CMG.
Okay.
CMG. On the
Yeah.
short side, CMG just looks horrendous. They had a big double top,
Ooh.
big
Ooh.
island top in January.
Look at that. It's sitting on a cliff here. You're getting me excited in a $650 stock here.
It's
Serge,
juicy, right? I mean, this thing
look at
going
that. Oh,
my
my
body in
God.
a heartbeat.
I just can tell you how many times I've lost money shorting into these kind of formations, but, risk management is the key. Serge
Yeah.
Berger, head trader and investment strategist at the Steady Trader. Serge is going to be a weekly guest on our show. Great input. Serge, sorry, I'll bring your chart up next time, I promise. Have a great trading day. We'll talk to you again next week.
Thanks,
Thanks,
Serge.
guys. Great to be on. Thank you.